here's something that most people never notice until they actually start building wealth. Once you see it, you really can't unsee it. Rich people almost never buy investments in their own name, like almost never. Go look up property records in any major city and you'll see names like Sunrise Holdings LLC or Pacific Investments LLCs buying up properties worth hundreds of thousands, sometimes millions. And your first instinct is to think, okay, that's obviously some big corporation with a whole team of people. But here's the wild part. A lot of times it's just one person, maybe two, who are working together on a deal, and they went out and set up the companies themselves, probably in less time than it takes to watch a Netflix episode. So the question should be running through your head right now, why? Why are they doing that instead of buying properties the normal way? What do they know that most people don't? And is that something that regular investors can actually do? Those are exactly the questions we're going to answer today, and I promise by the end of this video, it's going to make complete sense. Aloha! I'm Zasha, and on this channel, we talk about investing, real estate, and building wealth in ways that actually make sense for real people. Not just people who already have millions in the bank, but people who are actively trying to build something and want to understand how this all works. If that sounds like you, make sure to hit the subscribe button because we talk about this kind of stuff a lot. Now, before we go any further, I do want to say one quick thing. I am not an attorney and I'm not a CPA, so nothing in this video is legal or financial advice. I'm sharing what I've learned as a real estate investor and what I've seen experienced investors and really rich people do as they build their portfolios. If you're thinking about setting up an LLC for your own situation, you'll want to talk with a professional who can look at your specific circumstances. I'll actually point you to a resource at the end of this video that can help with that. Okay, now let's actually get into it. What is an LLC? The very first thing we need to do is clear this up, what an LLC actually is. Because if you don't have a solid understanding of the foundation, the rest of this conversation won't fully land with you. LLC stands for Limited Liability Company. And I know that phrase sounds very official and maybe even a little intimidating if you've never dealt with a business before, but the concept behind it is actually incredibly simple. And I want you to really lock this in. The easiest way to think about an LLC is that it's basically a legal container. That's it. It's a container that can hold an investment. So instead of you personally owning something like a rental property, the LLC owns that property and then you own the LLC. You're still the owner of the investment at the end of the day. Nothing changes about that. But there's just a legal layer, a protective structure sitting between you personally and the asset you're investing in. I like to think of it as a glass case you'd see in a museum. The item inside the case is valuable and it belongs to someone, but it's protected. There's something between the outside world and the thing that matters. You can't just walk up and grab it or damage it without going through that barrier first. The LLC is that glass case for your investment. And once you understand that image, the next question naturally becomes, okay, but why would an investor bother setting this up? Why not just buy the property directly under their own name, keep things simple? There are actually several really important reasons, and each one of them starts to make more and more sense the further you get into your investing journey. So let's go through them one by one. Reason number one, protection. The first and probably most talked about reason that investors use LLCs is to protect themselves, specifically protecting your personal life from what happens inside your investment. So let me kind of paint a picture for you that's going to make this really concrete. Let's say you own a rental property. Maybe it's a small single family home or a condo that you're renting out to renters. Things are going fine, money's coming in, renters seem happy, and then one day something unexpected happens at the property. Maybe a renter slips on the stairs because there was loose railing you didn't know about. Maybe something breaks and causes water damage and someone gets hurt. Maybe there is an accident on the property and someone decides they want to file a lawsuit against the property owner. Now, here's where things get serious. If that rental property is owned directly in your personal name, your personal assets could potentially be exposed in that lawsuit. We're talking about your personal savings account, your personal car, other investments you own, even other properties you have. Because in the eyes of the law, if the property is in your name, you and the investment are basically the same thing. there's no separation. But when you place that property inside an LLC, something important changes. The property is now owned by the LLC, and the LLC is its own separate legal entity. So when something goes wrong at the property level, the dispute stays at the LLC level. Your personal finances are now sitting behind a wall. Now, I want to be really honest with you here because I don't want anybody walking away with the wrong idea. An LLC is not some magic force field. It doesn't make you completely untouchable or lawsuit proof. There are situations where that separation can be challenged, and this is exactly why you need to work with professionals who understand how to structure things correctly. But what the LLC does do is create a meaningful layer of separation between your investment and your personal financial life. And that layer matters a whole lot, especially as your portfolio starts to grow. Think about it this way. If you're just starting out and you have one property, the stakes are at one level. But imagine you've been investing for 5 years and you have 4 or 5 more properties, savings, retirement, some other assets. The last thing you want is for a problem at one property to potentially threaten everything else you've worked to build. That's the protection conversation. And it's one of the biggest reasons experienced investors structure their deals through LLCs rather than in their personal name. Reason number 2, organization. The second reason investors use LLCs is something that doesn't get talked about as much, but honestly becomes incredibly important the more you invest, and that's organization. When someone buys their first investment property, they're usually not thinking too much about structure. They're just excited to close on a deal and get a renter in place. And in the early stage, buying in your personal name might feel totally fine because you're only managing one thing. But here's what happens over time. Investing tends to compound, not just financially, but in terms of complexity. Maybe you buy a second property a year later. Then you partner with a friend on a third deal. Then you start looking at a small commercial property. Suddenly, you have multiple income streams, multiple sets of expenses, multiple partners, and multiple situations all tangled together under one personal name. And when everything is mixed together like that, it becomes really difficult to track which expenses belong to which property, which income belongs to which deal. If you have one partner on a deal but not the others, how do you clearly separate the finances? What happens at tax time when you're trying to figure out what goes where? It becomes a mess really quickly, and a mess costs you time, money, and stress that you really don't need. LLCs solve this by creating clean, clear containers for each investment or project. Some investors create one LLC that holds all their properties. Other investors, especially as they get more serious, create a separate LLC for each individual property or each different project. That way, every investment sits in its own box with its own bank account, its own income, and its own expenses. I love the analogy of organizing files on a computer. If you just throw everything into one giant folder with no structure, finding anything becomes a nightmare, and things start getting confused with each other. But if you create individual folders for each project or each category, everything stays clean and you always know exactly where to look. That's essentially what investors are doing from a structural standpoint when they use their LLCs. They're creating a filing system for their investments that makes everything easier to manage as things grow. Reason 3, partnerships. The third reason is one that catches a lot of new investors off guard, and that's how LLCs make partnerships dramatically easier to manage. Here's the reality of real estate investing. A huge amount of deals involve more than one person. And once you start getting into that world, you realize pretty quickly that combining finances with other people can get complicated fast if you don't have the right structure in place. Think about how a typical real estate partnership might work. Maybe one person has the skills and the time to find deals and manage a project, but they don't have the money to purchase it. Another person has the money, they want to invest it, but they don't have the time or experience to run the deal themselves, so they decide to work together. Without a proper structure, you've got 2 people's personal names on a property title, 2 people's personal finances potentially mixing together, and a lot of gray area about who owns what and who's responsible if something goes sideways. But when investors use an LLC for that deal, everything gets cleaned up immediately. The LLC owns the property, each partner owns a percentage of the LLC, and those percentages are clearly spelled out in the company's operating agreement, which is basically the rule book for how the LLC works. So if one person is putting in 60% of the money and the other is putting in 40%, that's all documented. If one partner is getting a management fee for overseeing the project, that's documented. If the two partners ever disagree on a decision about the property, there's already a framework for how that gets handled because it's written out in advance. LLCs essentially turn a handshake deal into something with real structure and real legal clarity. And when you're putting significant amount of money on the line with another person, that structure isn't just nice to have, it's essential. Reason number 4, operating like a business. Here's a mindset shift I want you to sit with for a second, because I think it's actually the most underrated part of this whole conversation. When you start investing seriously, when you start having rental income coming in, expenses going out, contractors you're working with, renters you're communicating with, and lenders you're dealing with, you're running a legit business, whether you think of it that way or not. That's what it is. And there's a big difference between someone who has an investment and someone who runs an investment like a business. The difference usually shows up in how organized they are, how protected they are, and honestly, how much they're able to scale. Think about any other industry. A contractor doesn't run their entire construction business through their personal bank account and call it a day. They set up a company. A restaurant owner doesn't operate under their personal name. They create a business entity. Even a small freelancer who takes their work seriously will oftentimes set up an LLC to separate what they do professionally from their personal finances. Investors who use LLCs are doing the exact same thing. They're drawing a clear line between their personal finance life and investment activity. They have a separate bank account for the LLC. Income from renters goes into that account. Expenses for repairs, maintenance come out of that same account. Everything is clean and trackable. And this matters just beyond organization. When you operate through a properly structured LLC, you look more credible to lenders, to banks, to potential partners, and to other professionals in the industry. You show up differently in the room because you've taken the time to build something that actually looks and functions like an investment business. That professionalism is something that grows in importance as your portfolio grows. Okay, I need to stop here for a second because I know exactly what some of you are thinking and want to address it directly before we go any further. Does setting up an LLC lower my taxes? This is generally one of the most common questions about LLCs, and it's one of the most misunderstood topics out there. So let me be really clear about this. An LLC by itself doesn't automatically lower your taxes. I'll say it again. An LLC by itself doesn't reduce what you owe in taxes. What an LLC does is create structure, and that structure can work really powerfully alongside smart tax planning. But it's important to understand that two things are not the same. Here's what I mean. Real estate investing has some incredible tax advantages built into it as an asset class. Things like depreciation, which allows you to deduct the wear and tear of a property over time, even if the property is actually going up in value. Things like being able to deduct your expenses for maintenance, repairs, insurance, and property management against your rental income. Those benefits exist because of the type of investment you're holding, not because of the LLC itself. The LLC is how you hold and organize that investment. The tax advantages come from the investment and from working with professionals who understand how to structure things correctly. This is honestly one of the biggest reasons why investors, as they get serious, bring on a good CPA to their team. Someone who understands real estate investing can help you understand how income flows through your LLC, how expenses are categorized, and how everything fits into your overall financial picture in the most advantageous way possible. The LLC and the tax strategy work together, but they're different tools, and understanding that distinction will save you a lot of confusion down the road. I want to take a second to be really transparent with you. you, because I think this part of the conversation is important. When I first started hearing about LLCs, I honestly thought it was something way above my level. I thought it was for big developers who had already been in the game for decades, maybe for people with massive portfolios and entire legal teams working for them, not for someone like me who is just starting to figure out investing. And I think a lot of people feel that way. They hear the term LLC and something in their brain files it under complicated business stuff that doesn't apply to me, or why pay extra for an LLC or a business because I can do it personally. But the more I learned and the more I talked to experienced investors and professionals, the more I realized that's completely backwards. Setting up an LLC isn't something you do after you've made it. It's something you do as part of building towards something. It's not a sign that you've arrived. It's actually a tool you use on the journey. And once I started understanding that, my whole approach to investing changed. Instead of just asking, how do I buy this property? I started asking, how should this property be held and structured? Instead of just thinking about the deal, I started thinking about the foundation I was building underneath the deal. That shift in thinking, from just being someone who buys investments to someone who builds an intentional investment structure, that's one of the things that separates people who stay at 1 or 2 properties from others who build real portfolios over time. So let's pull all of this together before we wrap up, because I want you to leave this video with a really clear picture. An LLC is a legal container, a protective, organized structure that sits between you personally and your investment. And investors use them for 4 main reasons. The first is protection. Having that legal separation between your personal assets and your investment activity is one of the most smartest foundational moves you can make as someone building a real estate portfolio. The second is organization. As your investments grow, having clean, separate containers for different properties or projects makes everything easier to manage and track. The third is partnerships. When you're working with other people on a deal, an LLC gives everyone clear, documented ownership structure that protects all parties involved. And the fourth is operating like a real business, because that's what investing actually is. And your structure should reflect that. Now the tax piece is something you work through alongside with all of this with qualified professionals. The LLC creates the structure and the right team helps you make most of it. Now here's what I really want you to pay attention to before you click away, especially if this video sparks something for you and you're thinking, okay, I actually need to look into getting an LLC set up. Don't just sit on that thought though, because here's what happens. People watch a video like this, they feel motivated, and then life gets busy, and 6 months later, nothing changed. Don't let that be you. The resource I personally recommend for getting your LLC set up the right way is Prime Corporate Services. This is actually my #1 recommended solution for LLC setups, and I want to tell you a little bit about why I feel confident pointing you in their direction. Prime has helped over 170,000 businesses get formed. They have over 10,000 5-star Google reviews, and through my link, which is in the description below, you can get your LLC set up for $0 plus state fees. Here's what that includes. They handle your articles of organization, which is the official filing in your state. They draft your operating agreement, which is the legal document that spells out how your LLC is structured and governed. They file your EIN, which is your employer identification number with the IRS, basically your business's version of a social security number. They help you open a business checking account so your personal and investment finances are properly separated from day one, and you also get a free tax consultation included. So you get to sit down with someone and actually understand how to use the structure in a way that makes sense for your specific situation. That is a lot of value, and it's what makes Prime different from just filing some paperwork online and hoping you did it right. If you already have an LLC and you're not sure that it's set up correctly, they can help you with that too. They offer a complimentary free business consultation to review your existing structure and make sure everything is functioning the way it should be. Go check out the link in the description to learn more and get started. And if you want me to send you the direct link, just drop the word Prime in the comments below and I'll get it right to you. The bottom line from everything we talked about today is this: the way you hold and structure your investments matters just as much as the investments themselves. Wealthy investors didn't accidentally end up using LLCs. They learned early on that being intentional about structure is part of what actually builds lasting wealth. And that's something that most of us were never taught growing up, which is exactly why these conversations matter. If this video was helpful and broke things down in a way that actually made sense to you, let me know in the comments. I read them and it genuinely helps me understand what you want more of. And if you're not subscribed yet, this is a great time to do that because we go deep on real estate investing, building wealth, and all the things about money that most people were never taught, but absolutely should know. Thank you so much for being here. I'll catch you on the next one. Aloha.